everyone. Today is Friday, July 21st. My name is Evan. Welcome back to another edition of Stock Market Weekly, episode 691. I hope you're doing well out there. Hope you had a great week of trading. This is the show where we break down the most important trends, price action, and noteworthy moves that you may have missed across financial markets. We want to prepare you for the trading week ahead. So let's jump right into it here with some of the top headlines, takeaways, and discussion points that we're going to be going over in this week's video. Dow Jones making it to the top of our list here. It got a nice breakout, really sort of trying to lead this market higher while technology and some of the former leaders take a little bit of a breather here. We did have OPEX this week as well. So monthly option expiration occurred this Friday. I forget the notional that was expiring on today, but it's a big number, and you always get some interesting action, some pinning, and some rebalancing and all that fun stuff on these types of days. Tesla and Netflix reported earnings. They're kind of the two biggest, bellwether tech names that have reported so far in this earnings season. And so far, not so great on that initial reaction. Both stocks sort of punished here after their earnings reports. We'll take a look at the charts in just a little bit. We still have oil, which is trying to kind of firm up, lift up, and act like it wants to break out of a longer term consolidation. We'll talk about that. And then we've got the old Fed meeting next Wednesday. Seems fairly unanimous in terms of consensus, that is, that we will be, the Fed will be hiking 25 basis points. I think that brings us up to 5.25, 5.5. I forget exactly where we are, but 25 basis points moving on up. And I think the market's really going to be kind of hanging on the guidance going forward. It seems like this next rate hike could be, at least as the market is pricing in, the last rate hike that we see here in this cycle. And maybe we stay steadfast for, a number of months, higher for longer. The market will be certainly sniffing out lots of the in-between lines that we get from Powell and the voting members next week. So that's what I got for this week on tap. I'll be back here in just a second with some charts. All right, we are back here. We've got TC2000 loaded up on our desktop here. And as a reminder, if you are a TC2000 user and you have not yet checked out the tutorials, the guides, the scans, the custom indicators, all the cool things that we have built for this platform, you got to check it out on our website, traderist.com. There's a big Warden TC2000 top link there, and a whole storefront, free and paid downloads, but lots of cool things to help you get a little bit more out of this platform. If you're thinking about a different charting platform, check out TC2000. We do have a referral link in the description of this video, and like we said, we got lots of cool things on our website built for this platform. So let's get into it. Let's start off with the overview of the US indices here. I threw in the Dow Jones this week because, well, it was the leader. So we usually, we kind of ignore the Dow most of the time. Just seems a little redundant, but this week, it was mixed. We had S&P up, Nasdaq was down, Russell was up, Dow Jones leading the pack here, 2%, and then world stocks international outside the United States were flat, slightly down this week. If we take a look at volatility this week, you can see it was relatively unchanged. We're still at just under 20 here for Nasdaq vol, and for S&P VIX, 13.62, still an extremely low reading, up just a smidge from last week, but all things considered, pretty much the same course of action. If we take a look here at the sector performance this week, you can see mostly green. Energy was at the top of this list, healthcare and financial. So definitely a different group at the top of this list. Explains why we saw some more strength out of the Dow and some Russell stocks. On the downside, communication services, consumer discretionary, and we saw real estate. Three sectors here were in the red. Everything else was in the green. You can see 1 month numbers here are all universally green. That's a good thing. Again, that's some indication of market breadth here. The fact that we are getting more and more sectors that are trying to hold up, trying to lead. And we are seeing a little bit of rotation right now. Maybe it's just this initial earnings season, but certainly get a little bit of a changing of the guard this week. If we take a look at sectors here, so this is our custom smart trend filter, really just measures price and volume spanning across time. And it's pretty, intuitive to interpret here with its color-coded systems. There's not really, it's a daily chart, there's not really a whole lot of transitions that occurred this week. I mean, healthcare late in the week certainly was one. So you can see here on Thursday, Friday, really starting to expand to the upside here, getting some separation in these dots, which is indication of momentum and urgency. So nice to see healthcare kind of joining the charge, utilities as well, and staples. So both of these here, three of these that have been kind of left out. These are more defensive tones of the market, but certainly getting a little bit more rotation and love this week, changing to fresh buy signals here. Every single sector except for real estate now, I guess, and discretionary. Okay, and I lied. And communication services. These three have all flipped yellow. Man, I looked at this earlier and I didn't think there were a lot of changes. So we got some neutral readings in these three. We got some bullish readings in the bottom three here. So that was kind of the rotation that occurred. But generally speaking, again, a lot of kind of healthy signals occurring here across the sector list. If we take a look at market breadth a little bit closer here, you can see bottom of the screen, this is looking at NYSE 52-week highs, 52-week lows. You're still seeing a lot of green shoots here, nice spikes in the number of stocks hitting 52-week highs. That ratio is good. I don't really care too much about the number here, but generally the ratio is what you want to see. It's just a lot more green on here, at least if you're bullish on this market. If you're bearish on this market, if you're trying to short the market, well, you want to see the opposite. And we still aren't really seeing a whole lot of upticks here in the number of stocks making new 52-week lows. So for now, bulls remain in control here. If we look at some of our other ratios, we still see a nice uptrend in the percentage of stocks over 200 SMA. 65% of stocks are now above their 200 SMA. It's been a long time since we've seen a reading that high. That still seems to be encouraging. And same thing with the 50 SMA. 74% of stocks in the NYSE are over their 50 SMA. In terms of stocks up this week, you can see kind of mid percentile here. 65 to 70% of stocks were green this week. That's pretty constructive overall. Again, technology and some of those big heavyweights certainly were on the downside. Now, if we take a look at IBD list here, so this is the IBD 50, and I'm taking the top 10, taking a closer look at their performance. Investors Business Daily is a sponsor of the show, so shout out to them. Thanks for sponsoring us, making this show possible. You can support us. You can support IBD with a link in the description. Get yourself access to their digital subscription. It's very affordable, keeps you up to date on some helpful stock lists, headlines, action, earnings season, all very helpful with IBD this time of year. This is their top 10 stocks. You can see on the week here is very mixed. We had AMPH was the big standout leader here, up 10%, but then we had Technoglass was down 10.5%. We also saw a little bit of a shuffling here in the rankings. You can see DraftKings certainly making itself, climbing itself in the top 3 now for the IBD 50 list. So this has been a super strong performer and continues to kind of improve and work itself higher on lots of different lists. So this is just a small snapshot here, but again, you can get that access with a link in the description of this video. Let's take a look at commodities here. So you can see on the list, natural gas back at the top, 7%, 7.07% up. USO oil, 2.25%. Agriculture was up this week. The dollar index saw a nice rebound this week, up 1.23%. Gold was also up. So almost a universal kind of upswing here for commodities. The only thing that took a break was silver. Silver certainly had a big week last week, still in a nice little uptrend here in the shorter medium term. So that's nice to see. Natural gas starting to print a nice bullish dot here again. It's always a tricky one. Natural gas can be a lot of whipsaw here. Daily chart starting to improve. Commodities, generally speaking, pretty good look across the board. If we take a look at Treasury yields, so we saw a little bit of uptick here in yields really across the maturities. 30-year maybe cooled off a little bit, but 5-year, 10-year, shorter term, starting to go on that little bit of an upswing there. We want to keep a check on that, keep a balance on that. Remember, they came kind of, they've been all over the place, right? The market has been teetering between inflation and the strong economic sort of landscape that we have, the low low unemployment, the market's sort of really trying to figure out where, where the Fed's going to land here. I think we'll see some, potential fireworks. We have at least a catalyst on deck for the Fed next week when they announce this next rate hike, which again, everyone seems pretty unanimously agreed upon a 25 basis point rate hike. But what kind of clarity, what kind of reading in between the lines can we do on the future guidance is what the market's going to be hanging their hat on, and we should see probably some movement here. So check that out next Wednesday. Let's now get into some individual price action here. Let's take a look at the S&P 500. Here's our trusty roadmap weekly chart, just about tapping on this 4,600 level. That's what we've been talking about over the past handful of S&P analysis sessions here, going back multiple weeks. We've talked about really keeping things simple. These nice horizontal levels that have served us well in the past, they still seem to be the big levels to pay attention to. 4,300 on the downside and 4,600 on the upside. 4,600, as a reminder, was essentially the highs here from January, March time of 2022. It's where the market kind of double topped and then rolled over. And you can see we almost got back up there on Wednesday of this week. We got as high as about 45.78, and then we pulled back fairly aggressively on Thursday, and then just sort of had an inside session here on Friday. So the market may be cooling off a little bit right now. It's had a very impressive run first half of this year. I mean, you just really got to be pleased with the performance here in the S&P 500. You can see it got all the way back up there and really just hasn't done a whole lot now. So it's kind of pulled back, not a whole lot of technical damage. If you want to be really short term, it's certainly losing a little bit of momentum in that upper trend line, but quite frankly, it needs to pause at some point. What better time than when we've got, a big bulk of S&P 500 companies starting to report earnings next week, and that will likely be the catalyst here on some of this immediate movement. And of course, the Fed on Wednesday. So it's going to be a busy week, lots to chew on, lots for the market to sort of handle and digest, especially in this lower kind of volume, low of a summertime trading period. So it'll be interesting to see. OPEX is out of the way. Next week should be quite interesting to see if we come, really giving a good test of 4,600, or if we need to retreat a little bit and rebuild some energy. So that's what I'll be paying attention to for now. Good times are still rolling. The Qs getting hit a little bit harder this week, mostly for that shadowing of Tesla and Netflix, which really kind of put a damper on some things. Now, next week, we've got Amazon, we've got Microsoft, we've got Google. So we've got plenty of, again, catalysts on deck. For me on the Qs, it's quite simple. 370 is still the level I want to be paying attention to. So if we're above 370, I still am interested in, essentially buying dips or increasing exposure or keep maintaining exposure. But if we start breaking down with volume, if we get a follow through sell week next week below 370 and we start holding below 370, that would be more of a concern for me. That would mean that we have failed to hold above the January, March highs, and that would mean that we got potentially a trend change in front of us. It's not there yet, hasn't happened, but it's something I'll keep an open mind about. For now, we've got 3 days down, more earnings on deck. So let's see if we can get a nice test here to see if dip buyers show back up. That's what I'm going to be looking at. Russell 2000, again, has been acting a lot better now. It's back up towards the top end of the range. It's up around 195 or so. Hasn't spent a whole lot of time up here in the past 18 months or so. It continues to get rejected whenever it gets closer to this 200 level. It is pulling back a little bit Thursday, Friday, but still has lots of good momentum here. So keep an eye on this one. Weekly chart, you can see coming into some big levels here for the Russell 2000. So let's keep an open mind as it tests the top end of this range. So that is really the breakdown there on the major markets. Let's take a look at oil next here, and you can see oil weekly chart. Take a look here. We're starting to breach above some of these down channel that we've been in. And again, this isn't drawn precisely. I don't want to get hung up on this exact, perfectly manicured yellow line on this chart, but you get the drift here. Is essentially we've been drifting lower with this slight downward bias and slight sideways to downward bias. And you can see now 4 weeks in a row, oil is just catching a bid and really not finding too many sellers. Weekly MACD starting to go positive here. So there's some positive developments going on in oil. We flagged this a few weeks ago. We've been sort of tracking this ever since it broke out of this nice, neat, orderly range. Buyers have been in control. So let's see if that continues. And oil is just increasingly looking better each day. Gold also catching a little bit of a bid, but certainly pulled off a little bit this week. Again, we got the Fed meeting next week. We've got obviously what impact that'll have on the US dollar is impacting this, but gold trying to continue here for week number 4 as well to the upside. So keep an eye on that. Don't love it here. It's kind of a messy setup, so I don't have any position here, but we'll see how that plays out. Dollar, speaking of that, did a nice rebound this week, 1.23% up for the dollar index UUP. It was down 2.16% last week, so it had a huge move down last week, and then it's rebounding pretty aggressively this week. So still seems like it's range bound here, still stuck in a broader sideways range, and we'll see if the Fed catalyst has any updates for this. One other market I wanted to update on was high yield. So noticing high yield this week, staying pretty firm, catching, kind of a bid, holding up, not rolling over. I think that's constructive here. The fact that corporate bonds are continuing to kind of hold up here. They're not rolling over. So that is slightly encouraging there. I'd love to see more of a breakout move back up over 75 or so. That would be encouraging. But for now, we'll keep an eye on it. It's still mostly sideways as it tests the top end of a range. Now, speaking of those earnings on deck for next week, Amazon, let's take a look at it. So Amazon reports earnings. Actually, is this next week? This might be in 2 weeks. I think Amazon's the one in 2 weeks. So I don't think we have anything there. What else do we have? Microsoft is next week. Yes, Microsoft is next week. You can see here, this will be very, very interesting for how the market reacts to this. Because take a look at this weekly chart for Microsoft and look at this huge tail it put in this week. And then also just look at where this tail is occurring. This is right at the prior all-time highs for Microsoft in December of 2021. So if we fail here, again, not saying we will, but just saying if we fail here, this would set up a pretty epic kind of double top potential scenario here for Microsoft. So keep an eye on it. It is, objectively, it is failing here because it is back below the prior highs. So, it is failed with this big topping tail, but it's right at it. So again, let's see how this week follows up. Earnings are on deck. Now, if earnings come up, blast us off above it and we start trading to new all-time highs, then, certainly not a place I'd want to be, selling short if we start spiking higher and taking out the old all-time highs. But for you folks looking for more calculated short exposure, if it is failing here, if it does get through earnings and the market's not happy, then you've got the ingredients here for some type of double top, something of interest. Google weekly chart here, certainly nowhere near its all-time highs, but it has still been holding up relatively well over the past six weeks or so, 2 months. You can see that it certainly pulled back today or the past week, but it does have earnings next week. It's been holding up here, so interesting setup again as it's kind of trading at the top end of this range here from May, June, July of 2022. And what else? I think that's it. There's maybe a couple of others, but those are some of the big mega caps that we got on deck for next week. I'll leave you with a few from a few industries and sectors of interest here. So this comes from our sector and industry layout. It's basically a scan that looks through all of the industries in the stock market and tries to pull out the actionable ones that are either breaking out, moving on high volume, or trying to reverse a trend. This is the bullish list here. I'm not going to go through them all, but you can read right down this list here. These are some of the notable moves this week, so you can drill into some of these industries, look at some of the individual components in here. And then on the downside, on the bearish side, there's a shorter list. There's only four industries showing up here. We got airport and air services with a nice high volume kind of reversal. You got auto and auto truck dealerships, very heavy volume reversal, auto manufacturers, and then business services, all of those seeing some high reversal turnarounds. So that is what I have for this week, going into almost the final week of July. The summer is just absolutely flying by. Hopefully you're doing well out there. I'd love to know what your thoughts are. What are you looking at this week? What's your opinion on earnings season? Any thoughts and comments? Leave them below. Always love to read what other traders are looking at. And with that, I hope you have a great weekend, and we'll see you back here next week. Take care.